Welcome everyone to Financial 15. Kevin is here. I'm here. We're going to go through a few year-end financial planning tips. And as always, we're trying to provide some financial knowledge that you can use in your situation, help improve your situation, and wrap all that up in 15 minutes or less. We've got a full agenda today. What are we talking about today, Kevin?
Well, today we're going to do some year-end financial tips. We did tax tips the other day, so we're going to talk about things along the lines of RSPs, conversion to RIFs, which have to be done before the end of the year. We'll talk about, well, what a Santa Claus rally means for the market and how that affects basically what your investments might look like for the end of the year. And then we'll touch base on odds and ends such as RESP contributions, charitable tax contributions, or contributions to charity, should I say, and TFSAs, whether you should have them done before the end of the year and withdrawals in that aspect. So without any further ado, lead us off, Clint.
Absolutely. We're going to get into all of that. A quick reminder before we do, you can visit us. That website is now live, beckerorr.com. So feel free to go there. You can leave a comment. You can contact us. Lots of ways to go through that. Also, please like, subscribe the videos. We got lots of other videos on YouTube. Be sure to check those out. So we'll start with that first topic you just mentioned, RSPs to RIFs. They have to be done by the end of the calendar year in which you turn 72. So, pardon me, turn 71. Turn 71. You can see it on red in the screen there, the mandatory conversion age. What are some of the basics there, Kevin, to set this up?
Basically, what you can do is your RSP compared to your RIF, the big differences are in an RSP, you don't have to withdraw money. When you convert it to a RIF, you have to start withdrawing cash. So as you mentioned, conversion takes place mandatory at the age of 71, and then you have to start drawing money at the age of 72. And as we can see, just based on the chart there, the numbers start to go up substantially after you get to that point, sort of the 4% at 65, 5.28% by the time you get to 71. This is mandatory money that must come out each and every year after that as well. So as you get older, you have to take more out. The government wants to get their fair share of your cash sooner or later. You got any points you want to add to it?
Yeah, you mentioned fair share. That's in quotations there, the government's portion, right?
Very much so.
Yeah, well, the quick to mention, this is done by the federal government. So this table is the mandatory minimum withdrawal. So if you make the conversion at 71, for example, 72 is when the money comes out. So at 71, you're just doing the conversion. It's simply paperwork, RSP to RIF. The investments move over, everything moves as is. And then at 72, the following calendar year, you have to take a minimum amount out of the portfolio. It'll be a percentage based on age, and that's what this table shows you. Every age plus the associated minimum percentage that has to come out of the account. And unfortunately, those withdrawals are fully taxable. Like you said, the government's fair share has to come out of the pot there. So they are going to tax it as it comes out. The conversion has to be done by year end. So if you are 71 and you haven't done the conversion yet, make sure you get that paperwork done before the end of the calendar year. We've done other videos talking about how to handle the tax, and that this would be part of the taxation, but for now, we're simply mentioning the conversion. Any other final points on this one, Kevin?
Yeah, the last two final points is that this is just a minimum withdrawal sheet on a RIF, should we say. There is no maximum, so you only have to withdraw this, but you can withdraw more if you wish. And again, we mentioned the mandatory date as 71. You can convert earlier if you wish to convert and start drawing at the age of 65. As you can see, there's a percentage there for that as well. It's not mandatory that you wait till 71. You can do it earlier, and we can proceed from there. What's up next for us, Clint?
Yeah, there's a whole strategy there of converting earlier and trying to melt down the RSP, but that's a little more complicated than simply doing that year-end. The year-end item that we have to get done is if you're 71, you have to do the conversion. Shifting to the next topic here, we're still talking year-end. We're getting to the holidays. Often you get what we call a Santa Claus rally, which means markets going up. What we see on the chart... That's right, hopefully. What you see on the chart here is from LPL Research. What they looked at the S&P 500, so doing U.S. numbers, the last 70 years, and they did some averages, and you can see that in the second part of December, you normally get a rally. The market goes up. That's the up arrow there, and that's what they're calling the Santa Claus rally. What's your take on this, Kevin?
Yeah, the Santa Claus rally, technically from everything that I've read, it's the last 5 business days of December and the first 2 of January. On average, over the last, as you've mentioned, 70 years, it's been up 75% of the time in that scenario. And the percentage on average is anywhere between 1.2 and 1.3%. Now, there's a variety of different options for why this happens. Some people believe that there's light volume that goes on because most people are on vacation. Your institutional investors are taking time off. So that tends to lead to more and more of the, well, what we would call personal investors getting in there. And as such, they're more bullish usually. So you tend to see this starting to go up. not only that, but there's less tax loss selling by the time you get to this point of the year. So these are some of the factors that I think lead to why we get traditionally a Santa Claus rally at the end of the year. What are your points on it?
No, I would agree. You covered it quite well there. And for most folks, this is good news. It means the investments go up a little bit. We're talking financial planning tips year end. We talked RSP to RIF. This is on the investment front. And usually it means you get a little bit of a boost in December. So year end statements could look a little better because of the Santa Claus rally. And so far, to give you the 2020 numbers, so far it has been positive. All three of the major U.S. indexes, the S&P, the Dow, the NASDAQ, all of them are positive so far in Canada. The S&P TSX also positive for December. So we'll see how we finish out the year, but it looks like Santa Claus is coming to the markets. We are getting a little bit of a Christmas gift on our portfolio statements there, Kevin.
Yeah, I definitely wouldn't have thought that back in March. I kept thinking he was going to be bringing more red, more blood, as opposed to the black that we're seeing right now. So hopefully that continues going forward. So
absolutely. We'll change the slide here, move on over a few year-end contributions. This is all, again, year-end financial planning. Things to keep in mind as we get to that December 31st date. And there's a couple you want to think of. I'll tackle the first one, the RESP, the Registered Education Savings Plan. We could do a whole video on the Education Savings Plan. Will do one in the future.
Yes.
A few quick tips. You have to get the contributions in before December 31st. You can play some catch up. So if you miss 1 year, you can play catch up in future years. However, important to note, the catch up is limited. You can't just do a huge lump sum and, catch up for 5 years at once. Not possible. They do limit how much you can do in future years. And the key here is the Canadian Education Savings Grant. When you put money in, the government adds 20%. So a very nice top up. All of that goes towards education. And again, to qualify, you have to do it by December 31st. There are some restrictions around the age of the child. So if you wait too long, you won't even be able to get that limited catch-up, because once the kids obtain a certain age, it's harder to qualify for that education savings grant. Anything you want to add to that, Kevin?
Yeah, you covered the basics. And as you mentioned, we could spend 15 minutes alone talking about this topic. So I don't want to berate it to death as we're going, but you're right. I mean, the maximum amount of CESG that you can get, or Canada Edu Savings Grant, is $1,000 a year. So, I mean, on a $2,500 basis, you get 500. 2 years, you can get 1,000. Moving on from there, I mean, talking about the tax-free savings account, the deadline technically to contribute for the year is the end of the year, at which point you can put your 6,000 in for this year. And the limit for 2021 is not changed based on low inflation that we have. So it's 6,000 next year as well. But this is not a written in stone scenario, in the fact that if you don't contribute this year, you don't lose your 6,000. You can still carry that forward. You can't go back, but you can carry it forward. So it's important to know that if you haven't gotten it done this year by the 31st, you can still do it in early January, plus you'll have new contribution room. The other factor on the tax-free savings that I want to make mention of, though, is if you want to withdraw from one, doing it before the end of the year is probably the best thing. Because if you withdraw before December 31st, the amount you take out can automatically be recontributed starting the beginning of January. If you wait till January to withdraw, you now have to wait another full year before you can put the money that you took out back in. So it's important to take a look at whether or not you need it before the end of the year and when you're going to be using it. Any points to add on tax-free?
No, you covered it well. The deadline applies both on the contribution as well as on the withdrawal. At least we'd encourage it to apply on the withdrawal side as well, because there is some advantages there. Charitable donations, there is some favorable tax treatment in Canada for charitable donations. You do get a nice tax credit. A few things to keep in mind. It can be applied against your 2020 income. However, it has to be done by the calendar year. So if you want to use it for this year, you're going to have to get it done before the December 31st timeframe. You can carry them forward. So if you do put it in for 2020, but you end up not using it for that tax year, you can carry it forward for a couple of years. That is perfectly fine. Can also combine with spouses. So maybe you do donation, your partner does a donation, you can combine it and put it all on one person's tax return if it's more favorable. So it is a flexible system there. But again, that timing, end of December, end of the calendar year, if you want to use it for the current tax year. So keep that in mind. Another financial planning tip as we get close to December 31st. Any last points there, Kevin?
No, you covered charitable donations perfect. And you're right, remembering to mention the day that it is December 31st. The only one last point that I would make a mention of is if you were doing anything that you wanted to have covered this year for trading, trading has 2-day settlement. So in Canada, we're talking December 29th. Is the last day if you sell something for tax purposes, even though we've touched base on taxes beforehand. I just want to make that last mention before we go further. Otherwise, the only
Good
other
reminder.
points I want to add are that we want to make sure that everybody has a very happy holiday season and to stay safe and take care during the COVID, which definitely will be a different Christmas sort of scenario as far as I can see.
Yeah,
But we'll have to play it by ear from there. So anything
that's
you want
right.
to add at
That's
the
right.
last point there, Clint?
Yeah, we have the difference here. I mean, look at my casual clothing here, Kevin. I'm not in the office today, but we're getting into the holidays. We're still trying to make the videos, reach out to folks. A reminder, you can always catch us on that website, beckerorr.com, which is now live, so please visit the site. Also, like, share the videos. We're certainly happy to help out. And we are going to be back. We'll try to do another video next week and then right into 2021. So we'll be back with more videos. Please keep an eye out for that. Any final comment, Kevin?
Yeah, I think next week everybody will be seeing it the opposite way. We'll have you back in a suit, and I think I'll be doing the casual scenario as I sit in front of the World Juniors, hopefully, and see how that goes. But other than that, no, I just want to make sure to wish everybody a happy and healthy, safe holiday season. And I'm out until next week.
That sounds good. Everyone stay safe and take care.